Welcome back, everyone. Now, before the break, we heard about the extent of Alberta's economic downturn due to plunging oil prices. Now, we turn our attention to how you can keep your finances in check during the instability. To help with that, we have Shafik Hirani. He is Division Director and Senior Executive Financial Advisor with Investors Group in Calgary. Welcome back to Alberta Primetime, Shafik.
Thanks, Shauna. How are you?
I'm well, thank you. Okay, we heard from Todd Hirsch before the break, who doesn't feel a recession is likely. What do you think? What impact could low oil prices have on our finances?
Yeah, you know, I love Todd, and I've known him for about 10 years, and this is one area that we do tend to disagree. I know the GDP rate right now in Alberta is around 4%, and they're projecting it at ATB down to around 2%, I believe. Now, I can't see how we do not slip into a recession right now. To slip into a recession, that is defined as negative GDP, or 2 quarters of negative gross domestic productivity. And I can see GDP going down to 0, if not negative 2%. So I tend to disagree, and I think that's actually going to have an impact on not just the Alberta government, but I think it's going to have an impact on every single Albertan too. Okay,
let's talk about with the government. We heard Premier Prentice warn that all Albertans would be affected by this. What impact do you see on us if the province tries to recoup some of the funding?
Yeah, you know, Premier Prentice said that the impact is going to be about $500 million. What he didn't state is that's for the 2014 year budget. And we, as Albertans, have to recognize for every $1 drop in the price of oil, Alberta's government loses about $225 million in revenue. Well, from $106 to $46, because it closed down 4%, $46 today, that's $60 a barrel. $60 a barrel times $225 million, that's $13 billion. That is a significant deficit. So what that means for us as the average Albertan is we should be able to see provincial taxes go up. There should be an introduction to maybe a new HST tax or a provincial sales tax. We could see higher property taxes, lower unemployment. So it's like the perfect storm is hitting Albertans from all fronts if that continues for the whole year.
And of course, there's a lot of talk about interest rates, of course, speculated to rise as well. When do you think that might happen? And then what effect would that have on our pocketbooks?
Yeah, you know, that's a really good question, Shauna, and I think this is one area that a lot of people in the financial services industry and a lot of retail investors don't understand properly. When oil prices go down, that's actually deflationary because it's now cheaper on our gas pumps, so that actually prolongs when interest rates are going to go up. So you got to understand this isn't just an Alberta problem, this is a national problem, and if it's a national problem, there are areas in Canada that are doing good, like manufacturing in Toronto is actually doing good by a lower Canadian dollar, and the Canadian dollar is correlated with the price of oil. So as deflation starts because the price of oil is going down, you'll see the Canadian currency go down, exports rise, good for the Canadian economy, and that prolongs when interest rates are going to go up, which helps the investor. So we projected third quarter 2015 for interest rates to go up. We're now looking near the fourth quarter of 2015, maybe even first quarter of 2016.
Okay. In addition to this instability, you have said the average Albertan is more in debt than the average Canadian. Now, since some people would be facing unemployment, layoffs, that sort of thing, what should Albertans be doing to prepare?
Yeah, there's a lot, and if we were right, and if we are right that these prices are going to stay a little bit low for a longer period of time than people are projecting, the average Albertan could be in significant trouble. Imagine right now that you lose your job, your pension plan has been decimated, cut in half because you've been in an oil and gas company. Interest rates are going up, so you can't afford your mortgage. These are really tough times, plus you're paying more taxes, so you can't afford to buy things. Now, if you're the average Albertan, the first thing you got to do is understand that this could be a sector rotation, and you should not have all your money in Albertan energy sector. A lot of Canada itself represents 2% of the world's market cap in terms of the stock market. Why are Albertans putting 90% of their money in 2% of the world? It dumbfounds me. So I think the first thing you got to do is take a look at your asset allocation. The second thing you got to do is take a look at your home equity line of credit. If you do not have a home equity line of credit, go to your financial advisor, go to your bank, and just preventatively get a home equity line of credit, just in case you might need to do it. The third thing is set up a budget. You know, I know it seems pretty basic, but sit down, figure out what your income is, figure out what your expenses are. We're in RSP season. A good idea is to top off your RSPs, use a tax refund as an emergency cash reserve right now.
Okay, so being proactive in that sense, but what about continuing to make money? Many people wonder, in the midst of an uncertain economy, can that still be done? How do you do that?
Yeah, you know, there's a ton of things you can do to make money, and I know that it's very contrarian, and there's a lot of conflicting advice right now. A lot of smart money is saying, look, the oil prices are down to $46 a barrel. This is time to buy because you always got to buy low, and this is a good opportunity. And that could be true, but we're not suggesting that that's necessarily true. We still believe that you shouldn't, I personally believe you shouldn't catch a falling knife. And I think if you're going to make money, you got to take a look at the sector rotation that's occurring right now. You might want to make sure that you have maybe 10% of your portfolio in the Canadian natural resource sector, but you might want to look at some other sectors like the precious metal sectors, like the global dividend yielding sector, like the international markets. So you want to take a step back, take a look at your portfolio, where you look at your RSP portfolio, your pension portfolio, your TFSA portfolio, and make sure first and foremost you are diversified so that the capital is protected. The second thing to make money involves dollar cost averaging, making RSP loans, using some of the debt to pay down your investments as well.
All right, so definitely make an appointment with your financial advisor as soon as possible. I picked that up from you, Shafik.
Good.
Wonderful. Thank you very much for your time.
Thanks, Shauna.
That is Shafik Hirani. He is Division Director and Senior Executive Financial Advisor with Investors Group in Calgary.